Welcome to another deep dive. We're going to be talking all about trend following. So this is a strategy that can help you ride the market waves, whether it's up or down, a bull or a bear.
Right.
And today we're using The Little Book of Trading by Michael Covell. And one of the things that stood out to me immediately right in the beginning is that trend following kind of encourages you to just ignore the news.
Yeah.
And I find that really interesting.
I think that's a really important point. You can get really distracted by the news, and it can kind of throw you off. It can make you make poor decisions, potentially.
So it's kind of like instead of trying to predict the future,
Yeah.
you're just trying to understand what's happening.
Exactly. You're just trying to understand what the market's doing right now, like a surfer. You don't predict the waves, you just got to learn how to ride them.
Yeah.
So that's really what trend following is all about, using these, data-driven strategies. They're relying on things like historical price data, technical indicators, those sorts of things.
So data over gut feeling.
Yeah,
Yeah,
exactly.
love it. Okay, well, so one of the things that I found really fascinating was this idea of the 80-20 principle,
Right.
which, I think most of our listeners are familiar with.
Yeah.
But, this idea that like a small percentage of traders really drive the profits in the market.
Yeah.
Why is that?
Well, because the markets aren't perfectly efficient, right? Like a lot of people think. They're always looking for these opportunities to profit from these unexpected events, these price swings. I like to use the analogy of a poker player.
Okay.
They're trying to play the odds. They're waiting for these situations where they can really capitalize on these inefficiencies in the market.
So they're kind of like the card sharks, right? They're like reading the table
Exactly.
and they're just waiting. They're like, okay, this is my moment.
Right.
I'm going all in.
Yeah, they're looking for those tail situations where, you can really, really capitalize on that.
Okay. Well, the book goes through a bunch of different trend followers, like people who've really used this successfully.
Yeah.
Should we get into some of those?
Yeah, let's dive into some of the specific traders. I think that'd be really interesting. So we could start with two traders who take a very different approach to risk. So we've got Paul Mulvaney, who's not afraid to swing for the fences. He wants to maximize wealth creation, and he accepts there might be some pretty big losses along the way. And then you have Kevin Bruce, who's completely different. He started small, but he had incredible success through self-directed learning.
So one's swinging for the fences and one is playing kind of the long game a little bit more strategically.
Right, exactly.
I like it. We'll
Yeah.
start with the one swinging for the fences.
Okay, so Paul Mulvaney. He's really fascinating. In 2008, while most investors were freaking out and panicking, his trend-following system made over 100% returns.
Oh, wow.
Yeah,
But, okay, what about these big losses that he's willing to accept?
right.
Like, is that scary?
Yeah, so that's where risk management comes in for him. And he's really big on controlling leverage. But here's what I found really interesting. He says that actually lower leverage during the 2007-2008 crisis would lead to bigger losses.
Wait, so you're telling me that reducing your risk would have actually resulted in more losses?
Yeah, because, what his analysis showed was that by lowering leverage, he would have missed out on the recovery opportunities that his system was signaling.
So it's not about just taking less risk. It's about taking the right amount of risk, depending on what's going on in the market.
Exactly, yeah.
Wow, that's a very nuanced approach to risk. I like it.
Yeah. So very different from the next guy, Kevin Bruce. He built his fortune from a much, much smaller start.
Okay, I'm intrigued. Tell me about this Kevin Bruce.
So he's a great example. You don't have to come from Wall Street to be successful with this stuff. This guy made his fortune trading from Richmond, Virginia.
Really?
Yeah.
Okay, interesting. So what was his secret?
Really, self-learning. So just imagine this. He starts with $5,000 that he made selling homemade lunches in high school.
He was hustling early.
Yeah, he was definitely an entrepreneur.
Wow.
And he turned that $5,000 into a fortune by really researching and developing his own trend-following system. And he became a millionaire by the time he was 30.
That is amazing.
Yeah.
That is so inspiring. Just, taking control of your own destiny. Really, really cool.
Yeah. It's a great story. And then we have another guy, Larry Height, who's all about calculating risk and this concept called expected value.
Right.
And he believes you should only focus on what's verifiable and just block out all the noise, like we were talking about before.
Yeah. Well, he has that great quote, which is, you don't trade markets, you trade money.
Yes.
What do you think he meant by that?
I think he meant like money management, right? You're not just playing with numbers. You're actually managing your capital, and you got to
Yeah.
make decisions carefully because they have real world consequences.
You don't get caught up in the hype.
Yeah. Don't get emotional about it. Just Be strategic about your decisions.
Okay. Well, this is fascinating. So you said he's all about risk management. Did he have like a specific way he handled risk?
Yeah, so he actually had a rule where he would never risk more than 1% of his total account on any single trade.
Wow.
So that way, if a trade went against him, it wouldn't wipe him out.
Right.
He's playing the long game.
Okay, so we've got our big risk taker. We've got our self-made guy. Who else? Who's next?
Let's talk about Justin Vandergrift. So he learned early on the importance of discipline and just sticking to a system.
Again, with the discipline. Clearly a theme here.
Yeah.
What's his story?
Well, he actually started charting markets when he was 15 years old, and he wanted to, as he put it, outperform the high school jocks of the financial world.
I love that. A little bit of healthy competition.
Yeah, exactly. And he learned some really valuable lessons early on because he actually watched a trading firm implode due to poor risk management.
Oh, wow.
Yeah, so that really emphasized to him how important it is to have a system in place and to manage your money really well.
So having a system in place, like it's the foundation of your house, right? Like you need to be really strong if you're going to weather whatever storms come along.
It's a great analogy.
Okay, so I'm seeing a theme here.
Mm-hmm.
Discipline, risk management, systematic approach.
Yeah,
These are all like the key ingredients to trend following.
absolutely. And you see all these principles at play with the next guys we're going to talk about, Crittenden and Wilcox.
Okay, what about Crittenden and Wilcox?
So they actually built their own trend trading university.
Hold on, they had a whole university.
Yeah, because they realized traditional financial institutions just weren't teaching what actually worked in the markets.
Wow. Okay, so what was their secret sauce? What were they teaching?
One of their big things was this idea of hold your winners, cut your losers. Pretty simple.
Yeah, makes sense.
Yeah, but a lot of people don't do it.
I can see how that would be hard, though, to like let go of something that you think is going to turn around.
Right, but you got to be willing to cut your losses and let your winners run.
Yeah, don't get too attached.
Yeah.
Okay, so we've got, some really interesting characters so far. Is there anyone else you want to highlight?
Yeah, well, we've got Michael Clark. He was a programmer who became a trader. So he had a pretty unique perspective.
That's a very interesting combination.
Yeah, so he was all about these long-term systematic approaches, and he says you don't need to constantly adapt to the market, which a lot of people think you have to do.
Really? So you're telling me I don't have to be glued to the news all day long, like refreshing, refreshing, refreshing?
You don't.
Okay.
Because he builds these models that are dynamic and they account for those changes, He doesn't need to intervene constantly.
So it's like he built his self-driving car for the markets, basically.
Exactly. You just program it and it'll do its thing.
Less stress for me.
Yeah.
I like it. Okay, so trust the system. Trust the system. Okay, what about, so far, like I said, I'm seeing all these common threads. Discipline, risk management, systematic approach.
Yeah.
But is there anyone that kind of breaks the mold a little bit?
Well, we've got Charles Faulkner. He's not really a trader specifically, but he has this idea of living in the now and basing decisions on present circumstances, not on past experiences or future predictions.
Okay. So being present.
Yeah, exactly. Be present in the moment.
Not dwelling on what could have been.
Right. And he talks about how our human nature and all this media we consume these days really distracts us from making good financial choices.
Oh, yeah, totally. Because it's just like a constant barrage of information.
Yeah.
It's overwhelming.
So he says we have to step back from that noise and make decisions based on what's actually happening in the market right now.
So trust the data. Trust the present.
Yeah, exactly.
Not the past. Not the future. Okay. My mind is blown. This is really making me rethink things. It seems like trend following is not just about like the technical stuff,
Right.
It's really about a way of thinking.
It's a mindset shift. It is. You have to let go of the need to control everything.
I like it.
Yeah.
Okay, well, I am ready to learn more about this stuff.
Yeah, me too. Let's get into it.
Let's do it.
Okay.
It's interesting. All these traders we've been talking about, they all seem to really emphasize tuning out the noise.
Yeah, it's really important.
Like, how do you even do that?
Well, like Faulkner was saying, right, there's just so much information, so many opinions these days, especially with the 24/7 news cycle and social media and everything. It's just hard to filter it out.
Yeah. It's like, how do you cut through all that?
Well, I think that's one of the things that's really cool about trend following. You're not relying on your emotions or the latest headlines. You're looking at the data. You're trusting your system.
So you're not like freaking out every time the market dips or something. You're just like, okay, this is part of the plan.
Yeah, exactly. You got to have trust in the system that you've developed.
Yeah.
And that trust comes from really understanding these principles, the
Yeah.
discipline, the risk management, and the systematic approach.
It's really cool how all these traders, even though they all have different backgrounds and different approaches,
Mm.
they all kind of come back to those same principles.
Yeah, it's pretty universal. These principles aren't just for trend followers. They're kind of fundamental to any trading strategy that's going to be successful long term.
Totally.
But okay, so let's get into some more practical stuff. So what are some of the actual systems, like the strategies that trend followers use? We talked about breakouts before, but what are some other methods?
Yeah, breakouts, I get that. But like, give me some more tools. What else is in the toolbox?
So you got things like moving average crossovers. You've got Bollinger Band breakouts. There's a whole bunch of different indicators and patterns and things that people use.
Okay. Moving averages, Bollinger Bands. Break it down for me. Like, how do those work?
All right. So a moving average, basically, it smooths out the price fluctuations over a certain period of time. So like you could have a 20-day moving average or a 50-day moving average, something like that.
Okay.
And it kind of helps you see the direction of the trend more clearly.
So it's like looking at a map instead of just like driving around randomly.
Exactly. It gives you that bigger picture perspective. And then a lot of times people will use two moving averages together, one that's shorter term and one that's longer term, and they look for those points where they cross over each other.
So it's like your signal.
Yeah, that could be a buy or sell signal, depending on which way they're crossing.
Got it. Okay, that makes sense. What about these Bollinger Bands? What are those all about?
Bollinger Bands are really cool because they help you visualize the volatility in the market. So it's basically three lines. You've got the middle line, which is a moving average, and then you've got the upper and lower bands, which are a certain number of standard deviations away from that middle line.
'Cause the wider the bands, the more volatile the market.
Exactly. And traders look for signals when the price breaks out of those bands. That could mean there's a potential trend change happening.
So breakouts, moving averages, Bollinger Bands. It seems like there are a lot of ways to actually like find these trends.
Yeah.
But I'm guessing even if you find them, you got to know what to do, right?
Yeah, you got to manage your money well. You can have the best entry and exit signals in the world, but if you don't manage your risk, you're going to blow up your account.
Right. So it's like having a fancy sports car but not knowing how to drive stick shift.
Yeah, exactly. You're going to crash and burn. Money management is all about protecting your capital, making sure that you can stay in the game long enough to actually profit from those winning trends.
So it's not just about winning. It's about not losing everything.
Exactly. And it's something that all these traders we've been talking about, no matter what their approach is, they're all really, really good at managing risks.
So risk management, that's another one of those universal things.
It is. But, one thing you might be wondering is, do trend followers completely ignore fundamentals, like company earnings and stuff?
That's a good question. Because I've always heard, fundamentals are the foundation of investing, blah, blah, blah.
Yeah, I mean, it's not that they ignore them completely. It's more that they recognize that the market price already reflects all that information.
Right. So the price already takes into account everything that's going on.
Yeah, pretty much. Like all the news, all the analysis, it's all baked into that price.
So the price is like the ultimate truth teller.
It's kind of like a giant voting machine, right? Reflecting the collective wisdom or maybe the collective fear of all the traders out there.
I like that analogy. Okay, so trend followers are basically just reading the present, not trying to predict the future.
Exactly. Which I know can be hard for some people to wrap their heads around, especially if they're used to, doing all this fundamental analysis and trying to figure out what's going to happen next.
It's like surrendering to the market, in a way.
Yeah, kind of. But it can actually be really liberating, because you're not trying to outsmart everyone else. You're just reacting to what the market is telling you.
Okay. I think I need a minute to process all this. It's a lot to take in. Maybe we should recap some of the key takeaways so far.
Yeah, good idea.
So what are the main points that people should be walking away with from this deep dive?
Okay, so first and foremost, discipline is key. You got to stick to your system no matter what. Don't let your emotions get the best of you.
No emotional trading. Check.
Right. And remember, risk management, that's just as important as finding those profitable trades. Got to protect your capital, make sure you can stay in the game.
Okay, so manage your risk. Don't go all in on one trade. Got it.
And finally, you need a systematic approach. You got to have a set of rules that you follow consistently, no matter what the market is doing or how you're feeling that day.
So no winging it. Have a plan, stick to the plan.
Exactly. Discipline, risk management, systematic approach. Those are the three pillars of trend following.
I love it.
Yeah, and if you can embrace those principles, I really believe you can transform your trading.
Well, I'm feeling pretty good about my trading journey right now. This has been really, really helpful.
I'm glad to hear that. This book is a great starting point, but there's so much more to learn about trend following.
Yeah, this is just the beginning.
Exactly. But before we wrap up this part, I want to leave you with something to think about. We've been talking about the importance of having a system, but how much flexibility is too much flexibility?
That's a good question. Like, when does adapting to the market become just chasing your tail?
Right. You need a system for structure, but you also got to be able to adapt.
It's a tough balance.
It is. And that's
Yeah.
something that every trader has to figure out for themselves. Finding that sweet spot between rigidity and adaptability.
It's having that balance,
Yeah.
right? Sticking to the system, but being willing to adapt.
And that's something that you just discover over time as you get more experience, right? You kind of develop your own style, what works for you.
Yeah, it's like finding the right surfboard.
Yeah,
Some people like those big waves, some people like the smaller ones.
exactly. And just like surfing, trend following, you need practice. You need patience. You're going to wipe out a few times before you really catch that perfect wave.
Right. But when you do catch that wave, that's got to feel good.
It does. It's exciting. You see your count growing.
Right. That's the whole point.
Yeah.
Okay, so trend following, really, it's not about timing the market or anything. It's
Right.
just about understanding, like, okay, these trends are happening.
Right.
Let's ride them.
You got it.
I like it. Well, this has been really, really helpful. I'm feeling a lot more confident about all this stuff now.
That's great to hear.
This book, The Little Book of Trading, really great starting point.
Absolutely. There's tons more to learn, though.
So keep learning, keep experimenting. Don't be afraid to try new things.
And you know what? Find other people who are doing this too.
Yeah.
It's so helpful to connect with other traders, share ideas.
Yeah, you don't have to do this alone.
Exactly. Learn from each other. It
Yeah.
really makes a difference.
Well, I think that's a great place to wrap things up. So keep exploring, keep learning, and happy trading, everybody.
Happy trading.